Today, we are diving into broker price opinions, commonly known as BPOs, for the national portion of the real estate exam. A broker price opinion is an estimate of a property value performed by a licensed real estate broker or sales agent, usually at the specific request of a third party such as a lender, a bank, or an insurance company. On the national exam, you must be able to clearly distinguish a BPO from both a formal appraisal and a comparative market analysis, or CMA. While all three processes involve estimating value, their purposes and the legal authority behind them differ significantly, and testing centers love to swap these terms to confuse candidates. An appraisal is a formal and highly regulated process performed by a licensed or certified appraiser who must follow the uniform standards of professional appraisal practice, which is often referred to as USPAP. In contrast, a BPO is a less formal, faster, and generally much cheaper alternative that does not require the same level of rigorous data analysis as a full appraisal. The most critical point for your exam success is knowing when a BPO can and cannot be used according to federal law. Specifically, under the Dodd-Frank Act, federal law strictly prohibits the use of a BPO as the primary valuation for mortgage underwriting. If a consumer is applying for a new mortgage to purchase a residential home, the lender is legally required to use a formal appraisal rather than a BPO. If you encounter a question asking if a broker can provide a BPO for a primary loan origination or a federally related transaction involving a new purchase, the answer is a firm no. However, BPOs are widely used and legally acceptable in several other important scenarios. They are the industry standard for valuing properties in foreclosures and short sales, where the lender needs a quick estimate of the property value to decide on a loss mitigation strategy. They are also frequently used for portfolio evaluations, where an investment firm or a bank wants to know the current value of a large group of assets they already own, or for the removal of private mortgage insurance once a homeowner believes their equity has increased sufficiently. Exam questions often focus on the two main types of BPOs, which are interior and exterior valuations. An exterior BPO is often called a drive-by because the broker simply views the property from the street and takes photos of the facade and the surrounding neighborhood. They compare the exterior condition and location to recent sales data without ever stepping foot inside the house. An interior BPO is far more detailed and requires the broker to enter the property to assess the condition of the rooms, the quality of finishes, and any visible defects or repairs needed. A common trap on the exam involves the difference between a BPO and a CMA. Remember that a CMA is typically prepared for a client, like a seller who wants to know what price to list their home for, or a buyer determining a fair offer price. A BPO is usually prepared for a third party, like a bank or an asset management firm, and the broker is often paid a flat fee for the service. You might encounter a question asking who receives the fee for a BPO. In many jurisdictions, the law requires that the fee for a BPO be paid to the employing broker rather than directly to the sales agent. To keep these straight, use the mnemonic of broker price opinion is for the bank. This helps you remember that while agents do CMAs for people, they do BPOs for institutions. Another trick wording involves the level of detail. While a BPO is more formal than a quick CMA, it never reaches the level of a full appraisal. If a question suggests a BPO is as reliable as an appraisal for a federally related transaction, that is a distractor meant to confuse you. Always look for the word underwriting, because if the scenario involves a new loan, a BTO is the wrong answer every time. By focusing on these distinctions, you can avoid the common pitfalls surrounding property valuation questions on the national exam. This topic is about understanding the boundaries of your license and ensuring you do not step into the territory of a certified appraiser. Every broker and agent must know that while they are qualified to provide opinions, those opinions have strict legal limits in the world of finance and lending. Passing the exam requires you to respect the line between an opinion and a certified valuation.